Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Schlumberger Limited, one of the world's largest oilfield services companies, providing technology and services to the energy industry. Schlumberger has a significant global presence and is known for its innovation in drilling, reservoir characterization, and production. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Schlumberger has been a dominant force in the oilfield services industry for years. From a behavioral finance perspective, how do biases like overconfidence and the availability heuristic influence their decision-making, especially in areas like technology development and market expansion?
Overconfidence is particularly relevant to Schlumberger's approach, especially in their technology development and market expansion strategies. Given their position as a leader in the oilfield services industry, Schlumberger's leadership might exhibit strong confidence in their ability to continue innovating and expanding into new markets. This overconfidence can drive the company to invest heavily in advanced technologies and pursue aggressive market expansion with the expectation of high returns. While this can lead to successful ventures and reinforce their market leadership, it also poses risks if Schlumberger overestimates the demand for their services or underestimates the challenges in new markets. The availability heuristic also plays a significant role, particularly in how Schlumberger approaches risk assessment and decision-making. The availability heuristic refers to the tendency for people to base their judgments on information that is most readily available or recent. For Schlumberger, recent technological successes or high-profile projects might heavily influence their future investment decisions. This bias could lead them to prioritize projects that appear more immediately successful or relevant, potentially overlooking longer-term risks or opportunities that are less visible.
And this focus on leveraging their technological leadership and recent successes has helped Schlumberger maintain its dominant position in the oilfield services industry, appealing to both clients and investors who value innovation and expertise.
Exactly. Schlumberger's strategic use of overconfidence in pursuing technological leadership and the availability heuristic in making investment decisions appeals to investors looking for a company that balances innovation with market expansion. However, this approach also means that Schlumberger must carefully manage the risks associated with market volatility, changing energy demands, and geopolitical factors, particularly as the global energy landscape continues to evolve with new technologies and environmental considerations.
Let's talk about diversity, equity, and inclusion at Schlumberger. As a major player in the energy services industry, DEI is particularly important for Schlumberger. How does this intersect with behavioral finance?
Schlumberger's approach to DEI is crucial, especially as the company operates in a global and highly technical industry where diverse perspectives can drive better decision-making, operational efficiency, and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance Schlumberger's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Schlumberger to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the oilfield services industry. For investors, Schlumberger's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Schlumberger build stronger relationships with employees, clients, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like energy services, where the ability to foster inclusivity and operational efficiency is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Schlumberger not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Schlumberger operates in a highly competitive and volatile industry. How does the company adapt to changing energy demands and market conditions, and what role does behavioral finance play in this?
Schlumberger's strategy involves continuously adapting its technology offerings, service models, and market strategies to meet the evolving demands of the energy industry while maintaining its focus on innovation and customer satisfaction. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, technological advancements, and shifting energy policies. Schlumberger's ability to understand and respond to new energy trends such as the rise of renewable energy, digitalization, and automation allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, Schlumberger can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the oilfield services market.
And this adaptability is essential for Schlumberger, especially as they face competition from other oilfield service companies and the growing demand for cleaner and more sustainable energy solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Schlumberger's focus on understanding energy market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the oilfield services industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in energy policies, technological advancements, and competitive pressures.
Now, let's compare Schlumberger to other companies in the oilfield services and energy technology sectors like Halliburton, Baker Hughes, and Weatherford International. How do the behavioral finance dynamics differ?
Schlumberger's dynamics are often compared to other oilfield service giants like Halliburton, Baker Hughes, and Weatherford International, particularly in their approach to technology development, market expansion, and competition. Schlumberger's strength lies in its focus on technological leadership and global reach, appealing to investors looking for a company that balances innovation with market expansion. Halliburton, with its emphasis on providing comprehensive oilfield services and project management, appeals to investors interested in a company that prioritizes operational efficiency and customer relationships. Baker Hughes, known for its leadership in energy technology and digital solutions, attracts those looking for a company that is driving advancements in cleaner energy and industrial efficiency. Weatherford International, with its focus on specialized oilfield services and technology, appeals to investors interested in companies that integrate niche expertise with broad market offerings. Schlumberger's behavioral finance dynamics are shaped by its reputation for innovation, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the energy services industry.
And unlike Baker Hughes, which focuses heavily on energy technology and digital solutions, Schlumberger's strength lies in its comprehensive oilfield services and commitment to technological leadership, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Schlumberger, the focus on technological innovation, global reach, and market adaptability provides a unique value proposition in the oilfield services industry.
To sum up, Schlumberger's approach to business is deeply influenced by behavioral finance principles, whether it's through their technology development strategies, adaptation to changing energy demands, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Schlumberger's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.